Nope, trying to make me love Brad Pitt. It's not going to happen. It's not going to happen. You know why? Because Benjamin Button was a shitty movie. All right? I don't give a fuck about that movie. I saw that recently. Did you see that one, Tom? Benjamin Button? It was dog shit. It was awful, dude. Actually, I have two very important things to point out with that film. Okay? Thing number one, if he was born as a little old baby, right? And then he grows up, and then apparently grows backwards, though. Why isn't he like a 6 foot tall baby? Man, and baby Brad Pitt hungry. Okay, question number one. I guess thought process number two is that when I saw that movie, so it did happen to be the case that when the movie sort of ended, if you're like, oh no, spoiler alert, then fucking you're stupid, don't watch it. But either way, when they go back and it's like a little baby, and so she's got him in her arms and she's looking at him, whatever, and he dies. All I can think is that back in the 50s, when they were both in their mid-20s, right, she totally fucked that baby, and that's wrong, right? You shouldn't do that. So, either way, let's dive in here. That's a good intro. That's as good an intro as you're ever going to get. So, looking here, let's take a look, all right? Special order decisions, all right, guys? We're getting to our decision area now, okay? You've got to be able to churn through these on the exam, all right? And like I said before, each one of these has its own specific method associated with it, all right? So, let's go through our first decision, guys. Special order decisions. In special order decisions, we are the company, and of course, we suck, right? We are awesome, because people come from far and wide to buy our shit, so much so we need to actually make time for special orders. How do you do these problems? You create two columns, right, guys? You look at incremental revenue and incremental cost. That is to say, additional revenue and additional cost. Now, don't forget, some things matter, some things don't. Let's quickly go over these rules again. I'm sorry to bring you back here, Tom. Thanks. So, let's quickly go over these rules, okay? Rule number one. With no other information, pretty much always, variable costs are what? Relevant, right? Because they're avoidable, right? If you don't have the product, you can avoid them. So it's relevant. It does matter, right? The fixed costs, with no other information, fixed costs are always unavoidable. Unavoidable costs, are unrelevant. Okay, guys? They don't matter, all right? Because, again, even if you happen to close down your factory, you still have your fixed costs. So unavoidable costs are unrelevant. Now, when it comes to fixed costs, though, it is possible that some's avoidable and some's unavoidable. You'll see it in the problem, and we're going to kind of break those up as they come into play. And don't forget that also opportunity costs are always relevant as well. Okay, whereas in financial accounting, they didn't fucking matter. All right? So, coming back here, then let's actually start doing some problems. All right? So we got that done. Oh, I'm sorry, but before we do, let's also quickly talk about the second decision, because I'm going to clump these together. Like, these things should be so ingrained that you just are here for a refresher, right? You're here just to kind of knock a couple out. So, keep or eliminate a segment. Okay, guys? Keep or eliminate a segment. How do we handle these? We don't make a column for incremental revenue and incremental cost. That's what we do, of course, for the other ones. Here we're going to do what? Good. We're going to compute the real contribution margin, guys. That's the original contribution margin minus the avoidable cost, okay? If it's positive, it was a good segment. If it's negative, it was a bad segment, all right? Knowing only that information, let's dive in here, okay? And let me because we could talk about it all day, but it really doesn't much matter until we dive in and do it, all right? So let's look. Jones Incorporated makes computer monitors. The company has been producing and selling 50,000 monitors per year, but they have excess capacity. Good to know. The following information is also available. So sales price per monitor is $80. The variable cost per unit are the $10 for manufacturing, the $4.50 for selling and administrative, and also total fixed costs. We have some manufacturing and some selling and administrative. All right? Smith Incorporated has offered to purchase 20,000 monitors from Jones at $15 per monitor. Okay? Bam. Pause for a second. When you see some outside company wants to buy from you, by the way, whatever company starts the question off is who you are. You are Jones. All of a sudden, Smith comes out of the woodwork and wants to buy your shit, okay? Therefore, by that piece of information in the question, you know this is what's called a special order decision, all right, guys? A special order decision, all right? So, they've offered to purchase 20,000 monitors from Jones for $15 per monitor. Based on this information, what should they do? Okay, so we have rejected, accepted, and of course, what's the effect on income? Well, again, bam, bam, bam. You guys don't pass go. Don't even think about it. Just go right to the bottom of the page and write two columns. One for incremental or additional revenue, one for incremental or additional costs. All right? So, incremental revenue is always easy to make, right? That column's pretty easy. Why? Well, because if it makes any sense, if we decide to take the order, we say, okay, cool, we're going to take this, we are going to get a check for $15 times 20,000, right? $15 times 20,000. Okay? So that gives us 300,000, right? So if we decide to say, sure, we'll take this, we will just get a check for $300,000, No ifs, ands, or buts about it. But now the incremental cost is where we got to get a little bit crafty and figure out what costs do and don't matter to us. Well, let's look. The variable cost per unit, guys, variable cost per unit are as follows. Our manufacturing variable costs are $10. Do those matter, yes or no? Yes, they do. Going down the list, do these selling administrative costs matter? Well, now listen, don't bring in your personal opinion. It is possible that you will see a question on the exam which says, if they take the special order, the selling and administrative costs won't matter or they won't be incurred on the order. Okay, great. I mean, that is possible, but you weren't told that, so don't make that shit up. Without any other, and that's what you got to get good at. You got to get good at playing the game of what's the rule without any other information. Without any other information, fixed costs don't matter. Without any other information, variable costs always do matter. So this selling and administrative cost will matter, right? And now with no other information, which by the way, there is no other information, these fixed costs won't matter. So fuck them, okay? So the only sum total variable cost that will matter is this what? You got it, $14.50, right guys? $14.50 is going to matter. So let's look here. Now obviously you can see it's a good idea already, just kind of like, you know, it's going to cost us $14.50 per monitor times 20,000, right? So you take 14.5 times 20,000. You look over there and you're like, oh, and these are $15 times 20,000. So clearly it's not going to cost us that much. It's going to make us a little bit more. This is going to give us what? 290,000. Okay, guys, I want to make sure you're good with the method. When you see a special order decision question, you just go right to the bottom of the page, you write incremental revenue, incremental cost, and you compare them. Bam. So incremental revenue is greater than incremental cost. This is a good idea, right? So as far as the answer choices go, I would accept the special order. And don't forget, guys, the answer is always going to be in terms of the what? Good, in terms of the difference. All right, guys, we accept the special order because net income would increase by $10,000. So this difference is what matters, right? So D is going to be our answer here. Accept the special order because net income would increase. Okay, did I say decrease maybe? I'm sorry. Either way, it's a good idea because net income will increase by $10,000. All right? So that's a special order. Special order is very systematic, very straightforward. This one's a little more tough, okay? The keep or eliminate a segment decision. Let's take a look. Tutoring Zone operates a facility at the University of Georgia with only 3 classes tutored: farming 2500, hunting 1001, and incest 2000. Okay? Now, just to point this out, this is kind of funny. I want to make sure we're all abundantly clear on this. Right? Just gonna want to be. That's all brass tacks, guys. Do I teach this class at the University of Georgia? Yes, I do. Do I do this example though? I mean, yes, I do. Right? I think it's really funny because we're all like, that ain't too funny. I'm like, well, it's kind of funny. So, anyways, going back here because they fucked their sister, so it's kind of funny. So, looking here, as per their most recent income statement, farming 2500 is reporting a loss. Shown below is the applicable information. All right? And is it correct that farming is reporting a loss? Well, yeah, because if you look at the bottom line for farming, guys, look at their operating income, it's negative $500. So here we look and say, okay, sales, variable costs, contribution margin. Then under the column of fixed, we got avoidable and unavoidable. So it says here, if we keep on reading, assume that if Tutoring Zone drops the farming class, they can expand the hunting class. They can expand the facility to make more room for hunting. In doing so, they will double the revenues for hunting, right, without affecting the fixed cost, should they drop farming. Well, let's make sure we understand the 2 different varieties of questions you might be asked, okay? Variety number 1 is just going to be, should we ditch farming or not, period. Variety number 2 would be, should we ditch farming or not if we can expand one of these other ones. Does that make sense? So I want to make sure you guys are really 100% on board with how this works, okay? Should we ditch this one by virtue of the fact that in doing so, we can kind of expand another one, all right? Well, if we look here, okay, obviously we have answer choices galore, but let's do what we're supposed to do. So no matter what question, which of those 2 is asked, you're always going to start this way. You're always going to first compute the real contribution margin, guys. The real contribution margin is the contribution margin minus the avoidable fixed cost for the segment you're thinking about ditching. In other words, it's going to be for farming that amount there, right? Take their original contribution margin, but subtract out their fixed costs. Okay, guys? Take out the $1,100, all right? And if you'll notice, we will get a real contribution margin of positive $700 for farming. So let's be abundantly clear on this. If there was no other information in the question, guys, no other information, would you ditch farming? Yes or no? The answer is No, you wouldn't. Because since that number is positive, what that means is it's helping. That's the concept. All right, guys? One more time. Since that's positive, we know it's helping. All right? However, there is other information. Like, let's think about this logically. If I said, hey, listen, ditch the farming, right? And I will every year give you a check for $1,000. You go, okay, well, it's helping 700, but you're going to give me a check for 1,000, so I will lose 700 to gain 1,000, or in essence, I will do this in order to net $300. Not a bad idea, right? Because again, 1,000 minus 700 is 300. However, we do have, the information is not that straightforward. We have to kind of get a little bit more crafty. Because apparently now what happens is, well, we can expand our other area of hunting, and it's going to increase revenues and so on and so forth. So let's see what happens, okay? If we ditch farming, we're going to fuck with hunting, okay? We're going to double the sales for hunting. So instead of the sales being $9,500, guys, they're going to be double that, which is, of course, $19,000, right? This is going to be $10,000. But obviously the trick is what, guys? You don't really need to double this then double that. Because if the sales double, the variable cost by definition will also double, and now we just kind of know the contribution margin will double, guys. So the contribution margin will double to $9,000. But now let's be very, so and really the only place we focus is there. Right? We don't bother looking at anything else. We don't bother taking out fixed costs. We just look, so we look at the real contribution margin, right? Contribution margin minus avoidable fixed costs for the one we're thinking about ditching. But for the one that's going to be expanded, just focus on its contribution margin, period, right? So here's the idea, all right? When we look at this thing, okay, we'd say, all right, well, are we basically saying that should we ditch the one that's going to make us 700 in order to expand one that's going to make us 9,000, okay? The answer is no, because here's the kicker. You already started off with $4,500 of contribution margin. You have to look at it incrementally. In other words, the question is really asking, should I ditch this one for 700 in order to gain an additional 4,500, right? Because it goes from 45 to 9, right? That's kind of tricky. So what we have to do, guys, is you have to figure out the new contribution margin for hunting. Well, it's now $9,000, but we got to be careful. The incremental or additional contribution margin is what? You got it. 9,000 minus 4,500, which is coincidentally 4,500. All right? So now we're going to compare those two numbers. You got to compare those two, okay? Are you willing to ditch a segment, right? And in ditching it, you will lose 700 because it's helping you 700. So by ditching it, you'll immediately lose 700. But are you willing to do that so that you can make an additional 4,500? The answer is yes, it's a good idea. It's a good idea to the tune of the difference, right? So 4,500 minus 700 makes this a $3,800 good idea. So should we ditch the farming area? The answer is yes, because net income will increase by $3,800. All right? So we got our first couple decisions kind of out of the way, right? We got our special order. We got our keep or limit a segment. All right? We're going to churn through these. I want you guys to see them, recognize them, and know what to do. The hardest one, I honestly think, is the keep or limited segment. That one's kind of a pain in the ass, just because it's so involved, and there's such a few varieties that could kind of come at you. But again, there's going to be a couple extra questions there. Try them on your own, and if not, go ahead and look at those videos, and of course, the answer is always A. We will see you guys real soon.